It operates in the shadows, its influence felt in every corner of the globe. Its reach extends far beyond Wall Street, shaping the destinies of nations. This is BlackRock, the world's largest asset manager, shrouded in secrecy and accused of wielding undue influence. BlackRock's name may not be as familiar as Goldman Sachs, but its impact on the global economy is undeniable. Its vast holdings give it an unprecedented say in the direction of the global economy, raising concerns about whether such concentrated power is compatible with democracy. This is the story of BlackRock, a company that has become synonymous with the rise of a new global elite. BlackRock's origin story reads like something out of a Hollywood thriller, filled with ambition, risk, and a vision that would ultimately reshape the world of finance. In 1988, a small group of financial pioneers, led by Larry Fink, broke away from the Blackstone Group. Their goal was bold: to build a new kind of financial institution, one that would harness technology and data to manage risk in ways never seen before. BlackRock's early focus was on mortgage-backed securities, a market that was both complex and, at the time, shrouded in mystery. Most investors didn't fully understand these instruments, but Fink and his team saw opportunity where others saw confusion. They developed sophisticated computer models to analyze risk and uncover hidden value. This innovative approach allowed them to spot undervalued assets and capitalize on inefficiencies that traditional firms overlooked. The timing couldn't have been better. As the 1990s housing boom took off, BlackRock's expertise in mortgage-backed securities translated into massive profits, propelling the company into the financial spotlight. With each success, BlackRock's reputation grew. Soon, institutional investors and pension funds were lining up to entrust their assets to the firm, drawn by its innovative strategies and impressive returns. By the dawn of the new millennium, BlackRock had transformed from a small startup into a major force on Wall Street, commanding respect and attention from the entire financial industry. Eager to expand its reach, the company embarked on a series of strategic acquisitions, absorbing competitors and entering new markets across the globe. Each acquisition made BlackRock larger, more influential, and increasingly indispensable to the global financial system. Yet, as BlackRock's power grew, so did the questions about its true influence and the extent of its reach, casting a shadow of intrigue over the company's meteoric rise. BlackRock isn't a traditional bank. It's an asset manager on a colossal scale, managing trillions of dollars in assets for clients all over the world. Its reach extends far beyond what most people imagine when they think of a financial institution. BlackRock's influence is woven into the fabric of the global economy, touching everything from retirement savings to government investments. Its clients, from pension funds and insurance companies to sovereign wealth funds and even central banks, entrust BlackRock with their money to invest globally. The firm's decisions can impact the financial futures of millions, if not billions of people, often without them even realizing it. But BlackRock's sheer size and complexity let it operate in the shadow banking world, outside the boundaries of traditional regulation. This means it can move vast sums of money and take risks that regular banks can't, often with less oversight from government watchdogs. Shadow banks, including hedge funds and private equity firms, play a huge role in the global economy, but lack the transparency and strict rules that govern traditional banks. This can make it difficult for outsiders to truly understand what's happening behind closed doors. Critics argue BlackRock's dominance gives it too much power over corporations and markets, allowing it to shape business strategies and even influence government policy. Some fear this concentration of power could have unintended consequences. Its major stakes in countless companies mean it can influence corporate decisions worldwide, from executive pay to environmental policies. This level of control is unprecedented for a private company. Some worry BlackRock's complex, opaque dealings could threaten financial stability, especially if things go wrong behind the scenes. The lack of transparency makes it hard to predict how its actions might ripple through the economy. BlackRock insists it's a responsible actor, providing valuable services like diversification and risk management to help clients weather financial storms. The company says it works hard to protect investors and the broader financial system. The company points to its strong returns and long-term growth as proof it acts in clients' best interests. But as BlackRock's influence continues to grow, so do the questions about how much power one firm should really have. BlackRock's critics accuse it of using dark pools and shell companies to further its interests. Dark pools are private exchanges where trades happen anonymously, away from public scrutiny. Critics say these lack transparency and are open to abuse. Shell companies, often set up in tax havens, can be used to hide assets or minimize taxes. BlackRock's complex structure and offshore subsidiaries make tracking money difficult. The company denies wrongdoing, claiming its practices are legal and industry standard. Transparency advocates argue for stricter regulation to level the playing field and protect investors. At the helm of BlackRock stands Larry Fink, the company's founder, chairman, and CEO. Fink is not just a leader, he's the driving force behind BlackRock's rise to become the world's largest asset manager, overseeing trillions of dollars in investments. Fink is a polarizing figure, admired by many as a financial visionary who transformed the industry, yet criticized by others as a symbol of unchecked corporate power and the growing influence of Wall Street over everyday life. BlackRock's boardroom is filled with former government officials and Wall Street heavyweights, creating a powerful network of influence that extends far beyond the company itself. This concentration of power at the top raises important questions about transparency, oversight, and accountability in the financial world. BlackRock's vast pool of money comes from a wide range of sources: major institutional investors, pension funds that millions rely on for retirement, sovereign wealth funds representing entire nations, and the ultra-wealthy seeking to grow their fortunes. Its global reach stretches across continents, giving BlackRock an unparalleled pool of capital and amplifying its influence in markets from New York to Tokyo, London to Sydney. Critics worry that this immense power creates potential conflicts of interest, as BlackRock's decisions can sway entire economies and affect millions of lives. Some argue that BlackRock may be tempted to favor its largest and most influential clients, whose investments make up a significant portion of its business. This has led to fears that the interests of smaller investors and the general public could be sidelined or overlooked in favor of those with more money and power. In response, BlackRock insists it upholds the highest ethical standards for all clients, promising transparency, fairness, and a commitment to responsible investing in a rapidly changing world. BlackRock's relationship with government is complex and often opaque. While regulated, BlackRock is also a powerful political player, especially in Washington. The revolving door between BlackRock and government is a major concern. The company has hired many former officials, gaining valuable insider knowledge. BlackRock executives have also moved into top government roles. Critics argue these ties give BlackRock unfair influence over policy and regulation. They point to BlackRock's role in managing bailout funds during the 2008 financial crisis. BlackRock claims its government interactions are above board and fully legal. The company says its expertise makes it a valuable partner, especially in crises.